One of the many things I love about living in Silicon Valley is there are just so many brilliant, sharp, smart, critical thinking people that live here. And people that haven't necessarily IPO'd their company and have become billionaires, but just really smart, intelligent people. And when I was moving back to the States, I was really looking for that place to live where I could be challenged in my own beliefs and my own thoughts and be pushed to be better and smarter and stronger. And I always believed in challenging conventional wisdom. And if Silicon Valley defines anything, it's the place where everyone here is challenging some sort of conventional belief or wisdom or idea or way to build something. So I got a call from a friend of mine who is a CPA, still is a CPA, he's in his early 70s, and we've become friends over the last 15 years. And he was just so upset. He was just so tired. Janet Yellen was in front of Congress and she said some words and the market took off to the upside. And he's just like, I'm so tired. Is this the stupidest stock market in the world? Like, that we care about what an academic who can't get fired, and he was mentioning the podcast I had a couple weeks ago called The Trophy Society, how no one gets fired anymore. And, we always have to take the hit for people's stupid mistakes and failure. And he was so mad. He was so upset about what was going on and how the market should even care about this woman or the previous person before her, Bernanke, or the person before him, Greenspan. And he was just really tired about it and angry about it. And he was venting to me, but he was making some really good points. And I want to make one point that I made to him with you because it really cleared things up for him. And this is a guy who has been growing his money very successfully since literally the bottom of the last gold market in 1975. And it was this one thing that I just reminded him of, which being reminded of things is a really good idea, that reframed everything for him and really hasn't bothered him since. And I want to share that with you. So, hey everybody, this is RC Peck. And for this week's podcast for Fearless Wealth, this week's theme is what I'm calling price action, the best defense against manipulation. And I have one chart for you this week, but I'm going to put a lot of context and editorial around it. Now, what my friend was upset about was kind of the morality of what was happening, how he's going to be fine. This guy is well off. He's not going to be hurt by Bernanke or Yellen, but how what they are doing, what the Fed is doing, what the government is doing, what the Trophy Society is doing is really really hurting the bottom 98% of this country. And he was just really upset by the morality of it. And I talk about why price action, I talked to him about why price action is just the best defense. And I made the distinction to him between like what's morally right and what is the right thing to do to grow money. And so I want to share something with you that I noticed that's been happening since the very first trading day of this year. And it is that defensive stocks or sectors or assets that are typically considered defensive have been greatly outperforming the general market. And how you can be defensive and still win, kind of how the Seahawks crushed it in the Super Bowl. They have a really, really good defense. Now, their offense was good too, but the defense was completely shutting down the Broncos. And you look at this price chart here, you have utilities, which is the blue line, up almost 6% for the year. You have munis up a little over, well, it's up 2.3% for the year. Yeah. And you have corporate bonds up 1.7%. Now, these are typically defensive, places people go when they're concerned or when they want more protection of their money, and yet they're doing really well. And they continue to do well even when the market goes up. Notice when the market started going up, that utilities went up right with it. Utilities were going up when the market was going sideways, when the market was going down, and when the market is going up. People are moving into defensive, and you can be defensive and you can still win. Now, the point of this is what we're looking at here on the screen is price action. We're not looking at, oh, how old you are, and you should be in bonds or stocks or equities, but we're simply letting price action, the price action of sectors and individual stocks, but in this case, they're all sectors, tell us where we should be putting our money and not where we should be emotionally putting our money. And that's what my friend was kind of really bothered and angry about and kind of miffed. He's like, morally, this is completely corrupt. And this whole trophy society of no one getting fired and everybody wins, but really it's only the top 2% that wins. And maybe the top 1%. And it's not the top 2 or top 1%'s fault. It's what the government is doing. What calmed him down was just to separate out, look, morally completely corrupt what's going on, but that shouldn't hurt how we protect and grow our money. And what we want to do is really have that price action. Let the price action determine where our money goes. So to wrap up this week's theme, I just want my final thought to be just really remember to separate morality from growing your wealth. Make sure those are separate, because if you don't, you end up getting into situations where you're not actually going to grow your money the best. And remember, your strategies determine your portfolio growth and not your stock picks. This is R.C. Peck at fearlesswealth.com. Here's to taking back control of your wealth so you get the future you deserve.